This is Series 2, Episode 2. Today is January 9th, 2022, and this is my weekend stock market update. In this video, I'm going to explain why I've made the decision to move almost 50% of my portfolio out of the stock market and into cash. So I've taken some losses because I do not like what I'm seeing in the market, and I'm going to explain to you why. Just for transparency purposes, I want to talk about Nvidia first of all. So Nvidia, I talked about in Series 1, Episode 100. I took the trade, announced it on YouTube. It was a valid trade and it was profitable pretty quickly, but it has since declined, and I've decided to take a loss on that trade because I do not like what I'm seeing across the board. So I've taken a loss on Nvidia. I do, however, still have positions in a number of stocks, including Alibaba, NIO and Palantir, because they are longer term positions. Because they were good price, they weren't high price stocks. They were very good value stocks. So they are longer term, but I am out of a number of positions because I don't like what I'm seeing, and I'll explain that to you now. So fundamentally, there's some weakness setting in because the Bank of England, for example, has increased their interest rates, and the Fed are also doing the same. So that says to the market that potentially interest rates are going up and there are safer asset classes to put your money into. So why put all your money into the stock market, which is a risky asset, when you could put your money and make interest on your money in a bank account, for example? I won't go into all the details, and I'm sure people know more than me anyway. But that spooked the markets, and the price action's also showing me that there's a potential reversal coming, and I'm going to explain to you now. So let me start with the Nasdaq Composite. This is a monthly chart, so each candlestick is 1 month's worth of price action. I want to draw your attention to this candlestick here, and I'll explain it to you. So as the market reached this round number of 16,000, which is also important, round numbers. You see how price on this monthly bar goes all the way up. By the end of the month, it's all the way back down again, and it has a small body. That is a classic reversal signal potential. So that was in November. In December, we took out the low of this bar, so it's important we take out the low, which we did, because that then validates a potential reversals coming. And so we went lower, and lots of technology stocks got hit and growth stocks. We then came back up, and the market closed near the high of the month. And then January is open, and we started to see more selling. Well, if you take this bar here, guys, which is called a pin bar, Pinocchio bar, I call it, and a hanging man. So you put the two bars together, two candlesticks together, that is a negative potential reversal signal right there on the monthly time frame. I do not like it, and then you can see already we're starting to see selling. So that's the first thing to note. If you're paying attention, you may notice down here that we saw something similar before in the past where we had this pin bar here and another hanging man, and in this case it didn't work out and it carried on higher. So this stuff doesn't always work, but with the backdrop that I explained about the banks, the interest rates, that is what I think could spook the markets, and obviously with Omicron as well. Lots of reasons, and the price action is now showing a possible reversal. So let me delve deeper. I'll show you the Nasdaq daily chart now. So I'll walk you through my analysis in real time. So October, we come up, we create a high point, doesn't really mean much at this point. 16,000 levels hit, come down, go back up. The market's trying to break out above 16,000, doesn't, fails, and creates a head. This is a head and shoulders pattern. Here is your left shoulder, here is your head, and then the market comes down, creates a low point. Well, that happens to be 15,000, round number. Creates a low, and I've talked about that low before. That low there. Rallies. Then creates the right shoulder. So this appears to be, at that point, a head and shoulders top. Very strong reversal signal. Market comes down, so it's validated. Stops dead again at that previous support area. Now this then appears to be a Santa rally. I wasn't expecting it. I kind of was and kind of wasn't, but I bought Nvidia on the 13th of December. So I was with the market, I was correct, and the market did rally for a Santa rally. And I think a lot of people would have been sucked into this buying new positions, as I did, and I was correct. But you've got to change with the markets. Now, what's happened? So the market's come up to this same point. So this right shoulder here, the market's come up to it, and it struggled to break through, and it's just collapsed right back down again. So that is negative. So we know the monthly price action doesn't look good. Now this daily price action is starting to show negativity, but there are some signs of life here. So let me explain it, because this hasn't happened yet. So we are at the 15,000 level on the Nasdaq Composite. Now I can promise you many people will be watching this number because it's a round number, and we've got this double bottom and potentially a treble bottom forming here. So the market could, of course, stop here and reverse. And it might just come up so far and then come back down again. I do not know what's going to happen. I can't predict the future, but I don't like what I'm seeing on that bigger time frame, the monthly. And if we start breaching this 15,000, guys, this will be a negative sign for the Nasdaq, which would be particularly growth stocks. And I'm sure you've already seen the kind of pain people are having with growth stocks at the moment. So that is how the Nasdaq looks to me at the moment. It looks negative, but it's really important, this 15,000 level. Okay, so now I'm going to talk about the Dow Jones. So I'll bring up a monthly chart there. Okay, so round number is 35,000 on the Dow. So you can see price comes up on this monthly. It did struggle at that 35,000 round number. Managed to make its way through and made higher highs. So that does look good at the moment. But you can see already we're starting to see some weakness here. But that's a monthly price buy, and the month hasn't finished yet. So it's not really important at this moment in time. But round number there. But it does get important if you start looking at the weekly time frame now. So if I go down a little bit now and show you what I'm seeing there, then you'll start to see why well, you might not be able to see it, but I'm hoping you'll be able to understand why I'm getting a little bit nervous. So let me go down to the weekly time frame. So this is still the Dow Jones Industrial Average. Now let me explain this to you. So this looks very similar to the Nasdaq. So here is your left shoulder, your head, then a right shoulder's formed, and you can see selling did take place. This looked bearish, but on this occasion this made its way back up and managed to test this high, the head high basically, as you can see there. Now what do you see here? A very similar candlestick here to what I've talked about before, where price comes up. Now this is a weekly price bar, so price comes up, but by the end of the week, price has come all the way back down and is closed at the bottom of the range. So another possible signal for a reversal. And bear in mind that that's kind of a, like I say, a head and shoulders top again. So that again, we need to see. Well, of course we don't want to see it, but if you see price start taking out this low point on the Dow Jones, then I think the same thing's going to happen. I think the Dow is also going to take a nosedive. So hopefully you're starting to see the picture that I'm seeing now. Of course I could be absolutely incorrect, but I do not like it. So I'd rather be safe than sorry. Now over to the final chart, which is the S&P 500. So let me bring that up. So again, I'm on the monthly time frame here. And again, in November, we see a similar setup here where we have a long wick, and then the market closes lower for the month. So a whole month's worth of price action there looked bearish, possibly. Look to the right, 4,500. Okay, not a round number, but if the general markets start moving, then they all tend to follow suit. So that again in November looked like it could be a reversal signal. So we wait. The following month, December, very bullish. Now, January, we're starting to see red here. Doesn't mean reversal's coming, but when you take everything into context with the Nasdaq, as well as the Dow and the interest rate decisions, and we're at these extreme highs. Look at it. It's crazy, this kind of move. And there's more money gone into the stock market in the last year or so than in the lifetime of the stock market. So in 1 year, because of all the private investors, more money is flown into the stock market than in the entirety of the stock market. That's what I've read. Just 1 year. It's incredible how much money is flown in. So there feels like a bubble is brewing here, guys. It doesn't look good for me. So like I said, I'd rather be safe than sorry. I'm just trying to show you what I'm seeing. Let me just go down to daily now on the S&P. So this is still the S&P 500. Now I've drawn a horizontal line and put these crosses in because price came up, created a high, down, tested the high, fell away, came back up, tested the high again, fell away, came up, broke the high, right? So this is important because when price breaks through, as it comes back down, this previous high point should act as a potential floor for price. So I was watching this, and on this daily price action, you can see that this candlestick here has got a long wick up and a long wick down and a small body. That shows indecisive behavior. So that could have quite easily held there and rallied, but it didn't. It carried on lower on Friday, as you can see with this red candle here. So overall, I don't like the conditions, especially with the interest rates increasing and investors looking for a safer place to put their money. So I know inflation's in play. There's lots of things to consider. So I might be completely wrong. I just can only show you what the price action is showing me, and that is why I've taken my decision to move almost 50% of my capital into cash. So I really hope this is informative for you. If you like what I'm doing here, please like and subscribe. Comment. I really appreciate comments, and I will do another video as things develop. One more point, if you're still watching. In episode 1 this year, so I talked about a stock. The price action did just hit that entry point and it started to rally straight away. Now I've decided not to take that trade. It is a good trade, but because of all of this, I'm not taking it, and I won't be taking any trades until further notice. So I'll speak to you soon, guys. Thank you very much for watching the video.